Hello to my lovely viewers, welcome back to Alpha Ambition, and I hope all of you are doing really good. So today's video is going to be very important for anyone who seeks a steady stream of passive income. Obviously, taking out time for a side hustle or building an autopilot income stream like a rental income from your rental property is not in everybody's reach. So in this regard, investing in dividend stocks seem like a great option to earn a true passive income with little upfront investment. And this video will hopefully minimize even that little investment because I'm gonna share with you in this video merits of a few Canadian stocks that arguably seem to be the best dividend stocks. An important note here, there is going to be a follow-up video where I'm gonna talk about dividend stock picking strategy. Essentially, we're going to talk about some of the key indicators or criteria that we need to look at to pick any dividend stock. And you can apply this approach, since it's a generalized approach, you can apply this approach on any stock market and in any country. So please do not miss that video because I'm not only going to discuss this strategy, but also I'm going to be sharing my viewpoint on some of the very important safeguards that you need to put in place before you go all in on the dividend stocks. So before we dive in, I would like to tell all my lovely viewers that there is more highly recommended content on this channel, and I've made very simple, easy to understand videos on best Canadian credit cards, on top industries to invest in for 2022, etc. So please do check them out and subscribe to this channel. I know, looking at the YouTube analytics, many of you do not subscribe to this channel or hit the like button on the video. It'll really help me according to the YouTube algorithm. And do not forget to share it with your friends and family because sharing is caring. Alright, with that out of the way, let's dive deep into today's agenda. So the agenda of today's video is twofold. First, I'm going to talk about very critical things to keep in mind when you're doing dividend stock investing. And two, we're going to go through the list of 5 best Canadian stocks that I've picked as per my research, in my opinion, are the best for dividend stock investing. So let's begin. If you're investing in a dividend stock, there are a couple of more things that you need to keep in mind. And first of the lot is dividend yield. Now, what is dividend yield? Dividend yield is an annualized dividend amount which is represented as a percentage of stock price. Now, to break it down into simple words, let's say if the stock price is $100 and the dividend it gives out in a full year is $4, so the dividend yield here is 4%. Second is the dividend payout ratio. It simply means what percentage of the total earnings of the company in a single year it is distributing in terms of dividends. So in very simple terms, companies that give out dividend set aside a certain amount to be paid out as dividend to its investors, and the other amount is basically reinvested in the company in most of the cases so that the company can keep on growing and it can invest into different line of businesses, in R&D, in purchasing more inventory, so on and so forth. Third important factor is the dividend consistency. Now this is key because it shows how reliable is the company in terms of giving its dividend out. You want to avoid the company which gives out 5% dividend yield in 1 year and then afterwards it doesn't give any dividend for the next 10 years. And last but not the least, the total return on your investment, which also includes the growth in the stock price. It is the measure of overall health of the company. Now you don't want to be investing in a company where the dividend yield is very high but the stock price is basically declining and it's been declining in a steady way. That way is, even if you're making some money through dividend, you're actually losing money over the period of time. Now with those 4 key importance out of the way, let's dive into the meat of today's video. Alright, the first company which is on the list is Manulife Financial Corporation. Now, this is a huge company and I'm pretty sure it needs no introduction, but Manulife is a Canadian multinational insurance company and it has been around since 1887. So you can imagine, like, this is a very steady business. It has an asset under management of about $1.1 trillion. So very solid business. And why I really like this dividend stock is because the dividend is actually among the highest in the Canadian market. About 4.35% is what you get in terms of the annual dividend yield. The stock price, particularly for Manulife, has been very less volatile. Over the period of 1 year, we've seen that it has gained about 9.27%. over the period of 5% as well, it has not grown a lot. So definitely this is one stock which you can hope that it can give you a very steady income stream in terms of the dividend income. But in terms of the stock price growth, we haven't seen much that in the past. The company pays dividend pretty consistently, and we can see it over here. This is Manulife, and we can see that over the period of different months, different quarters, the company has consistently not even paid dividends but also increased dividends over the period of time. Another key aspect about the stock is that according to many analysts, they believe that the stock price is severely undervalued, and definitely something which is exciting about this stock in particular. Alright, so second one on the list is Canaccord Genuity Group. The ticker symbol is CF. Canaccord is a full-service investment banking firm and a financial services firm which specializes in wealth management and brokerage in capital markets. I mean, if you're somebody who's associated with financial services or work in a bank, you've definitely heard of Canaccord before. This is again a big company. The dividend yield is average 1.96%, but the reason that I really like this stock is because not only it gives a decent dividend yield, it has shown massive growth in the last couple of years. I mean, look at the 5-year growth that it has shown. The stock has garnered about 226% in terms of the stock price growth. So not only you're getting a good dividend, we're also getting good appreciation in the stock. Well, this is something that we have seen in the past, but it doesn't mean that it cannot happen in the future. The company has a solid overall health. The forecasted earning growth for this company is also pretty solid. One thing to notice is that company has actually reduced the dividend payout in the last couple of years, and we can see it over here. It has reduced the dividend by over 80%, over 50%, and it has also increased it before. But I think in my opinion, whenever the company basically changes track in terms of its growth mode versus sustainable mode, company does cut on the dividend and basically put that earning back into the company for its growth, and probably that is why we have seen such massive growth in this company's stock price. Alright, so let's move over to the third company that we have here. So this one is Power Corporation of Canada. Now, it is again a very well-known company in Canada. It has core holdings in insurance, retirement, wealth management, investment management as part of its portfolio. The company is based out of Montreal, and the dividend yield for this stock, POW ticker symbol, is among the highest in the Canadian market at 4.65%. This is actually pretty high. And the company has an excellent record of paying the dividend with consistency and reliability, and you can see over here that the company has mostly increased its dividend in the last so many years. So definitely another good sign. This stock has actually shown a very decent growth potential in the last couple of years. So 1-year growth in the stock price has been 38%. 5-year growth has been about 36%, 37%. And in my research, as per analysts from different sources, the stock price for this company is trading actually at a discount of 17.6% below its fair value. So not only it has a great dividend yield, it has shown decent stock price growth in the last 5 years, and the company is still trading below its fair value. So this is definitely one stock that you can again consider very strong potential candidate in your portfolio. Alright, so moving to stock number 4 here is Magna International. And I'm pretty sure if you're somebody who's interested in automobiles, you must have heard of Magna before. The ticker symbol is MG. It's a Canadian mobility technology company. It is a manufacturer of auto parts for various different companies, various different car brands in the world. It has an average dividend yield of 2.1%. And not only just that, in terms of the stock price appreciation as well, we can see that the stock price has grown 8% in the last 1 year and about 80% in the last 5 years. So definitely a good combination of decent dividend yield and also stock price appreciation. And we can see it over here. The company also has a great reputation of not only handing out the dividends on time and also appreciating these dividends over the previous so many years. And not just that, as per a lot of analysts, here we are on Yahoo Finance again, we can see that as per many analysts, they actually rate it as somewhere between a strong buy and a buy, and the stock price is undervalued and it is trading below its fair value. So again, another opportunity not just to hold a stock for good dividend payment, but also in terms of stock appreciation as well. And on top of that, the earning forecast of this company shows that the company has the potential to grow at about 33.6% per year. And last but not the least, the company that we have on our tracker today is the Imperial Oil. Now we talk about Canada and we don't talk about the big fat Canadian oil companies. That cannot happen. So Imperial Oil is a Canadian petroleum company. It is Canada's second biggest integrated oil company. So ticker symbol IMO has an average dividend yield of 2.5%, and the company has paid the dividend with reliability in the last so many years. And not only that, in most of the instances it has only increased the dividend payout. So again, a very good sign. And one thing that stands out for IMO is its explosive stock price growth in the last 1 year, and it has primarily to do with the oil supply and demand at the global level. And not just that, looking at the analyst prediction and the research around the company, the earnings are forecast to grow at about 25.42% per year, and also the stock is trading below its fair value by 32.8%, which makes it again a very strong contender to go in your portfolio as a dividend stock. Now that we've looked at all the stocks which are definitely a good contender for dividend stock investing, let's try and put this perspective as to what it means in financial terms. So I've made this pretty simple Excel model for you guys. So if you have about $100,000 to invest, let's say today, and you want to invest this $100,000 into stocks that bear some kind of dividend, then given the stocks that we've discussed today, we've got all of them listed out: Manulife, Canaccord, Power Corp, Magna, Imperial, and we've got all the dividend yield. And assuming that you basically put 20,000 in each of these stocks, what you can really make at the end of the year is about $3,100 in terms of annual passive income. What really translates into monthly passive income is about $260. So guys, so this is over and above what the stock will basically give you in terms of stock price appreciation or depreciation. This is for sure what these stocks can fetch you in terms of monthly passive income if you have, this big of a sum to invest in dividend stocks. And if you want to further optimize the dividend gains, then the second and a more risky strategy would be to put it in Manulife and Power Corp alone, which basically gives the highest dividend yields here. And assuming that you put 50,000 in each, you can get a monthly passive income of about $375. And this is something which is over and above what the stock will perform in terms of its price growth. So that is all for today's video, guys. I hope you really liked the content, and if you did, then please do not forget to like, share and subscribe, because I have loads of content that I've planned for the future, and I'll keep basically telling you about what's coming in the near future. So the next video, as I've already told in the beginning, it's gonna be a video on strategy on how to invest and how to pick dividend stocks in any stock market in any country. Now I'll see you in the next video. In the meantime, take very good care of yourself. Thank you and bye-bye.